watching everything that just played out last week or the week before on the stablecoin front, which we'll get into because you guys are also working on USD1 and some of that. I think it is interesting to think about where we are in terms of catalyst versus risk, right? And perhaps if you think so, Mike, you've been in this space for a really long time, and there are a lot of people saying at some point there might come a day where Bitcoin breaks from being a risk asset and really does start to play its role as this hedge against risk. And historically, that hasn't necessarily played out because as stocks decline, Bitcoin's price also goes down. But now increasingly, even yesterday, last night, I don't know if you were watching it, but as the 10-year was, like the yield on the 10-year was surging as markets were getting crushed, which normally doesn't happen. There's a lot of weird things happening right now. So when you think about the evolution of where crypto's at now, how real are some of those changes to you in terms of the evolution of Bitcoin and maybe to a lesser extent, the rest of crypto?
Look, I think there's a couple of competing things that are going on right now. People are trying to read it towards how it's going to impact Bitcoin and digital assets. One is that eventually the US fails to really contain the spending. And then at that point, we end up with another version of QE, and maybe then Bitcoin takes off. So that's all on this prescribed theory that where Bitcoin really sees growth is when cash is flowing very well in our ecosystem. And whether that will happen exactly or not, there's a lot of people watching that. Now, there's this new thing that's happening, which is due to tariffs. What's going on with the long-term bonds? And all of a sudden, we're wondering, like, is there a glut of excess bonds being put onto the market by somebody or not? We're not really exactly sure what's going on there yet. Is it just fears over tariffs? Is it the basis trade on treasuries that's starting to unwind? I've seen all of these theories, and those are not really related to crypto. But if we are in that process of having a lot of bonds move onto the market, it's not clear that you're going to see a Fed rate cut, which some of the other folks looking for Bitcoin to just go up are looking for. From my view, look, we've been in this for 12 years or so now, and digital assets just continue to make progress. It's slow. The biggest inhibitor over the last 5 years has absolutely been that the regulators just weren't engaging in conversation. At the beginning of that 5-year period, if they had just started the process of figuring out how digital assets are going to play in markets, it would have been fine. It's okay that it takes a few years to sort out. But in the more recent years, where it's just completely stalled and they're working negatively against us, it causes everybody to put the brakes on digital assets. Those brakes are off now. Everybody's working on it. So what's going to happen in the macro market will happen no matter what. But we're now making progress on everything digital. Look, I start with the belief, and a lot of people are increasingly believing this, that everything moves to digital assets, equities, bonds. Of course, we got the digital assets themselves. Of course, we've got the DeFi products. We got the stablecoin products. I start with that thesis, and I think we get there. Now, whether we get there in 2025, 2030, 2035, actually that I don't care about as much. So the long-term perspective is super bright, and the fact that these conversations are happening in the US was a pivotal thing that had to happen in order for us to get to the next level.